Hey, welcome to the Aramir Roundtable. Today is May, let's see, 5,
Eight.
6, 7th, the 8th. Yeah, the 8th. I don't have my calendar with me and I'm sharing my screen. I only have one monitor on my laptop. So it's Wednesday. And we have Matt from ORATS on. He's going to show us our back tester. So welcome, Matt. Nice to have you back.
Yeah, great to be here. Good to see you guys all again.
Yep. And before we go too far, just a normal disclosure that we're not a broker dealer or investment advisor. It's for educational purposes only. Options and futures involve risks and are not suitable for all investors. Past performance is not indicative of future results. And if you want to read the whole thing, pause the recording or go to the bottom of any of our web pages. So with that, I'm going to stop sharing my screen and we'll switch it over to you, Matt.
Can you see me?
Not yet.
Okay.
Okay, we're back with Matt's screen. So I see it loud. It's
Yeah.
easy to read.
Yeah, this is our agreement, and I am. I did register as an investment advisor,
Okay.
and so yeah, I'm actually a pension consultant, registered investment advisor,
All right.
and so yeah, we do have some of the largest pensions in the world. I'll just give you a little bit of background of me and my firm. Yeah, I went to Chicago to go to graduate school and then went down to the floor of the SIBO, was successful on the floor there, did some programming and hired some statisticians and PhDs, and we wrote a bunch of analysis, skew analysis and forecasting of volatilities. And then I backed other traders on the floor, 17. We were one of the largest sole prop backed ones. And since it was my money, we really watched risk quite a bit. And we never wanted to be short units. The definition of short units is not short any net calls or net puts. And what that means is like a short stock would be a net short unit. And so you want to be long a call against that. Anyway, so we really watched our risk and we were able to grind out a pretty good living there, and then got married and no more trading. Let's go to selling our research. And so we started ORATS in 2001 and been going ever since. We actually formulated our back testing software, which we're going to be talking about today, just to prove out the efficacy of the proprietary analytics that we were creating. And the backtester soon got a life of its own, and now it's one of our biggest products. And speaking of products, I'll just look at some of the other products, as some people are interested in our deck. So if you go to this is a private URL, but so we have our back tester that we're going to be talking about today. We have a data API, which I'll be showing as well, because I think we've tied in data into our back tester. It's one of the things that's coming down the pipe. We have the historical quotes that we sell that are underlying the back tester. We have a dividend feed that forecasts out into the future. You need to have dividends in your option valuations. So we create very good Greeks. We have a whole method of summarizing the implied volatility skew. If you're interested, we could talk about that. We do a lot on earnings and breaking down and isolating the implied earnings move, for example. And then our products in progress, I should say. We have a scanner where you would implement a back test, position alerts. If when you're setting up a back test, we have exiting signals, like you might exit if a 20 delta put that you're long goes to a 50 delta put, you might exit it. And so we have a position alert that will warn you that happened. Risker is showing Greeks and payoff pictures. And then we're soon to be releasing an optimizer, which is going to be really neat, especially if you've been back testing a lot. You'll say, well, what's the best days to expiration for this SPX short put, for example? Is it 7 days to expiration, 10 days, 15 days, and when should I exit? When I've made 50%, when I made 100%, when should I exit? So our optimizer combines all those, and instead of having to run those by hand, I think I mentioned, like, 3 different factors there. So it'd be 3 times 3, maybe 9 different tests just ran there and combined all those different things. So that's going to be neat for me and some of the heavier users. And then these data signals are really neat, where, right now we have IV rank. So only buy this call when the IV rank is below 50, for example. You can make that rule. But we've effectively just added, and we're about to release, hundreds of signals on our data. So you can tell we're busy. This is what we're up to. We've had good visibility. I just at the Option Industry Conference. I'll show a picture of that. Well, I did the Kentucky Derby recap. This is our blog. So we presented there for entrepreneurs. We just got back, so that it's me right here, and Jeb Bush shared that he was the keynote and got some good. And there's my lovely wife. So anyway, let's get what you came here for is not to see this, but to get into some back testing. So let's go run our back tester, and it's at wheel.orats.com. Again, I'll share, we have a special pricing. It's usually for retail clients, $99 a month. We have a special pricing of $5.99 for the year, for the first year, $7.99 for the year after that. So it's 50% off for you guys. We just put that link together. And again, I'll share this. Chargeify is our processing. Anyway, so let's look at some back tests. One of the things that we hear a lot are just, what I like to look at are long puts. So let's protect ourselves first, especially in this environment that we're seeing today, where the market has a lot of tumult because of the trade issues going on. So we'll just do an easy long put. As you know, long puts are very expensive. So I'm setting up a back test where I type in a symbol, and I am setting up days to expiration, strike selection. Those are the basics that we'll put in. So we'll just start with the basics here. So days to expiration, I'll just stay with the 30-day. And then the delta, obviously puts have a negative delta, but we're just going to start with, we say absolute delta to keep it easy on us. You could also put in stock out of the money percentage. So let's just say you could sell a 10% out of the money put, but I'm going to, many of our users use delta because the out of the moneyness is affected by the volatility of a stock, and delta takes that into account. I know it's a little bit complex, but now if we send this off, let's just submit that. So what happens is now it's going to go process, and you'll see it as processing. So I know from experience that a 30 delta is a very expensive way to own a put. So in our back testing that we've done, especially for some of the larger firms, they're looking at protection that goes a lot farther out. So we'll look at like a 300 day, so 10 times longer. I'll set my min and max days to 250 and 500. So I'm sure to get all the expirations out there. And we go back to 2007, and then we're going to do much farther out of the money. So we're going to go a 10 delta. So again, deltas are, I know that the purists don't like to talk about this, but I always think of it as the chance of something coming in the money. So maybe only that's just a rule of thumb. That's not a hardcore thing, but let's just say you could think of it as a 10% chance. So I'll set my min as 5 deltas and my max as 15 deltas, which means you're never going to find one exactly 10. So when we go to simulate our trading in the past, we're going to start at 1/3/2007 and start trading from them and rolling. So we're going to find the closest to the 10 delta, the closest to the 300 delta. We have a whole blog post on how we choose which one. But since this is such a long-term thing, if we send this, and I'll send it, we're only going to get, maybe 10 trades, or a little more than 10 trades, because, the way the rules are, you enter a trade, and then it rolls out, and then you enter the next trade. So that's not going to be that helpful for us. So I'm going to create another one that is more realistic. So, and I'm going to add to that I can't do two things well at once. So let's recreate that one where it's 10 delta. And now what I'm going to do is do a thing called staggering, or where we enter every certain amount of days. So, if we have this 300-day put and the stock moves up, for example, this is going to be even farther out of the money. So what we'll want to do is maybe enter, only a small percentage and keep entering in and staggering our trade. So this is what that. So let's just say we stagger every 30 days, we stagger once a month in this particular strategy. And another thing that I want to do is I also want to say, well, if the market really goes down like it's doing right now, you might, take some profits and get out of it, and then roll to a new one. So that's called an exit trigger. So we can exit after a certain profit and loss. We could exit when the delta gets to a certain amount. So why don't we use we'll use delta this time. So exit on strike trigger, or the absolute delta. So we're going to exit this one if it goes over, let's just say we're entering a 10 delta. So let's just say if it goes over a 30 delta, we're going to exit this trade and re-roll into a new one. So now we're going to submit that trade. And while that's, while those are processing, I'd like to show you some that I've already run. So here's a completed test. And it usually takes, a couple minutes, 3 minutes, depending on how much complexity is in there. So let's look at a test that I already ran one when I was preparing for this. So this is that SPY put longer term. I'm entering every 45 days on this one and exiting at 300%. So if you make 300% of your money, so we'll be able to compare this one to the other one that we just ran and see how it looks. So actually, negative 0.87 is not bad when you're talking about puts, and this is notional return, so the loss divided by the stock price. There were 283 days in the trade. There were 99 total trades, so you traded a few times a year. It's a 10-year 10 times. 10-year test. So 2007, 2008. So these are the monthly returns. This is the graph of the performance. So this looks like a typical long put test where you make some money when the market goes down, and you're kind of bleeding, as you're just paying and you're not making any money, and you get little blips. So it looks like we made a little bit of money here in 2018. And again, this is a pretty far out of the money put. And so we're not losing a whole lot of money and we're not making a whole lot of money, but it's nice to have these units on. So let's take a look at, here are some of the things that I look at. So I like to look at, how did it do in the debacle times of 2008? You made a little bit of money. The market was down something like 30%. You got 7%. So, not bad. And then, didn't do too well, just made 1/3% in 2018. So, the strategy, long puts, difficult to make money, but it's like I said, good protection if you have long stock, for example, on. And then what we do is we show all the trades that were encompassed in this particular strategy. So like I said, the first one, we go back to 2007 and we look for the 10 delta put, and we found it. The stock was 141 and we bought the 120s with 263 days to expiration. And then, we bought the September 2007s, 263 days out. When September 2007 came around, the stock was 150, so the puts expired worthless. Now, in 2008, the market went down and we made money on these puts, and we were, like I said, we were getting out at 300%, so a profit. So that's 3 times 6 times that, so about that amount. So that's when we were getting out, and then, like I said, re-rolling into the new tests. So that's what I want to show you on just a basic long put test. Tom, I'll pause it here and just see if there are any questions on this or if you just want me to keep plowing ahead.
Yeah, we had a couple. Thomas asked, what's the price used for the test that close 5, 10 minutes before, or is it end of day or?
Yeah, great question. So, our we explain it in in our let me just get to that. We explain all that on our back testing page. So it's info, take out the CTA there, info.orats.com at backtest. So this is our informational pages. And so basically what we do is we capture the, and we have all these instructional videos as well, but it's a very good question because we take a snapshot of the market 14 minutes before the close. And so we think that's, as close to the close as possible while you still have some time to trade, and where the markets tend to deteriorate as you get towards the close. I was a market maker. When it got close to the close, we widened out the markets because we weren't as excited to trade because when you trade an option, you usually will go to the underlying stock to hedge out the delta exposure. As that becomes unavailable for market makers, they tend to widen out their market. So we use 14 minutes before the close. Another question might be, what about slippage or commission? So we charge ourselves 1 cent of commissions, and the slippage is traveling 75% of the bid-ask spread. So what that means is, if your bid-ask is, if your bid at, let's say you're $1 at $1.10 for a put, 50% is here, so we're going to go halfway to buy a put. So we're going to pay 1.075 for that put. So hopefully that answers those questions. Tom, are there any more?
Yeah, there's one more. What about overlapping trades in a single pass? I guess you kind of showed that with that one test you're doing with the staggered.
Yeah, so it's a good question. And the question might be like, how do you maybe account for that? So one of the things you could do is download all of the trades and download the daily returns. If you go to stock outputs and you look at strategy returns, let's see if this will come up. Yeah. So, here's every day, and here are all the trades. So I'll freeze the top row so we can figure out what this is. So you can see that we have 2 trades, 3 trades on, as it goes. I don't know if you can see this or not, but
yeah, we can see it.
Yeah. So hopefully, so what we're doing is we're tracking. We're saying, okay, you got 1 trade on, and here's how you did. And you could, so if you add these up, these match the monthly returns. And we try to keep it simple. We don't do compounding returns. We actually started out the whole thing with compounding returns, but you would lose over 100% sometimes, and it would be very confusing. So we're kind of a self-funding strategy, meaning we always have $10,000 invested in the strategy each day. So then we could, we don't have the path dependency, and it's just like you could look at the strategy at any point in time, and you always have the same size and the same amount. So it's not like compounding where you might have 6 times as much money in the later years as you did. Well, this is just simple interest, simple returns each day, and in that way we can add them together. So hopefully that helped.
Yeah, a few more questions. I don't know if you want to hold these to the end or not, but there's already 4 more questions. And Marcus, it's not end of day data, it's almost end of day. It's close to the close, 14 minutes before the close.
Yeah.
And then what about spread testing? I think that'll come a little bit later, like calendars, diagonals, butterflies.
Yeah.
Can you adjust the slippage, like midpoint plus 5 cents?
Not 5 cents. We have that set at a percentage because it matters how wide the market is usually, just being a market maker. You can adjust the the slippage percentage. And also I should say, let me just go to our docs page, and we talk about slippage and our methodology. And so this is important on slippage. So it's 75% for a one leg. So as you get more legs, it's very punitive if you're still staying the same slippage percentage. So we've determined, just based on a lot of actual trades, how we should handle like an iron condor or a butterfly or a simple vertical. So simple verticals we travel 66% of the bid-ask spread. Butterflies, we travel 56% of the bid-ask spread, because it gets wider because it's additive, like you're adding these bid-ask spreads. And so, you don't want to be too punitive on, for example, an iron condor. And that's typically how it works in the market. You get filled, they have these complex order books that are pretty effective for getting filled in between the markets. So yeah, I think what I'm hearing is let's look at a spread now and see how that works. And the answer is yes, we can create other spreads. So since we have a long put here, let's do a short put spread. That'll be a 2-leg one. So SPY, and you can see in our dropdown we have a ton of different strategies, and I'm going to show you something that's really awesome, I think, is then we have the ability to combine strategies. So for example, once you, remind me if I forget about that, Tom, but let's run a short put spread strategy. And then, so the short put spread now, you can see there are 2 legs. You're going to set the days to expiration there. Again, these are defaults. You could change these. You could change when you're trading at IV rank, min max. You could go for a spread yield percent. So this is interesting because you could say, well, what's the spread divided by the stock price? So I always want to get, on this, I know something like 1%, and we could go look at the trades and then afterwards, and then set these spread yield percents. But first, let's just run this trade, because I'm not exactly sure what the normal price of these are. You could set spread deltas. You could do delta neutral hedging. You could do delta neutral hedging when you get to a certain day, like flatten out every 3 days, or flatten out if the delta gets to 50 delta or something. You can limit these by how wide the market is. So if you see a really wide market, you will avoid that. If it's over, like, let's just say 0.5% of the stock price. This is avoiding if it's kind of a messed up market, and we define messed up by violating the put call parity. So there's ways to filter out bad markets, and we do a lot of cleaning of our data. Like I said, I was a past market maker, so I have some experience in that. You could also test around earnings, days to earnings. Obviously in SPY there's no earnings, and then exiting based on profit and loss, exiting based on, this is a good one. Let's do this one. So this is called exiting based on strike different percent. So let's say if we have a $5 wide spread, and we would exit if the price 1 divided by 5 is below the mid, you could set the min max. So I want to exit if the spread price is, let's say, greater than 90% of the width of the strikes. So hopefully that makes sense. Like you can only make or this is a short one. So this is when it's going in the money. And you could also say, well, if it goes below 10% of that, I also want to get out, or 5%. Let's just make it. You could exit based on holding days, like you've already held it for 10 days, I want to get out, or 3 days to expiration, or number of days to expiration. If that spread price goes below a nickel or something like that, you could determine that there. And you could also set business days to earnings. you exit after or the day before earnings. And then you could also do leg relationships right here. So right now, the days to expiration, if you wanted to put a diagonal together, for example, the min max is 0. And then the strike width, there has to be at least 2 points of difference. So you could set that to, if you only want to sell 10 points or 10 strikes of difference. But and you could also set delta differences. So what's the difference in the two, the long versus the short, from a min max on a delta. So there's a lot of features that you could set to get exactly the short spread, the short put spread that you want. So I'm just going to send that off, and let me explain. So I already did a short put spread here, and again, so it made 1.44% over the years. So what we might do is take a look at that and say, well, that was great, but we lost 10% in 2008, and I don't want to, that's maybe too much risk for my investment objectives. So what you can do then is combine this with combine strategies. So here's the way you combine strategies. There are these check boxes next to it. So I'm going to put a checkbox next to the short put spread, and I'm going to combine that with that long put. So I know if I do it 50-50, it's going to be somewhere in between that, or 1-to-1. So here's how then you press the combine button, and you could see it so this is 50-50. I'm going to do 1 by 1, just so it'll be additive, and we could see that. So this is going to go and combine these two strategies, and then present the combined annual return sharps and all the rest of the statistics. So you might be saying, okay, well, that's great, because now we could make almost an infinite number of combinations and be able to construct any type really of strategy. So we're not constrained by our list of strategies that we have in the drop down here. We do have a lot. We have covered combos, collars, buy rights, butterflies, all these to make it easy for you. It sets up all the deltas and all that. But you could see by this ability, we could do something like a short put spread with a long put with a short call. What's that called? I don't know. Collar with a short put spread. But anyway, the point is that you can combine these, and it automatically puts a third. You can combine all these strategies together and come up with an infinite number of possibilities for you there. So again, I'll pause there and maybe I went too quick, or we saw how to put a put spread together, and we also saw how to combine strategies. So Tom, if you want to pass on some questions, if there are any, based on that.
No more questions from the chat. I did have one. Is there a way to add something like, we like to look at, say, the percent of contango or backwardation for the VIX futures, the first and the second months? Is there anything like that you could add in as like a filter, or maybe technical analysis filters?
Yeah, so that's really good question. I'd love to look at that. So so now I'm going to point you to our data set here. I was looking at the transportations, but you can, so in our next release, I have a contango, but that's a contango just for IYT. That's like a 45 days of a slope. So I think that's a very important measure. And the answer is you can't yet, but like our latest release, that's what we're doing. We're going to be able to, we're releasing all the ORATS technical indicators, and they're like right here we're at EY. So what is that, 100? And then we're also going to allow people to describe their own technical indicators and calculate that. There'll be an extra charge. We haven't really decided that, but we're going to be able to host those indicators. I don't know if it would be useful to show you to see how it looks, but the answer is yes. We are going to be releasing that, and it's a very strong. It's a very good question, and if you guys are talking about that, I applaud you because that you guys are quite advanced, and that's how I trade. I look at, we just went into SPY contango.
Yeah, I just sent out a message to my group yesterday that the futures were had gone into backwardation.
Yep, and I'll show you. We saw it 2 days ago. And I'll show it. It takes a minute. So this is what we're looking at right now is our data API, and so we calculate all this information continually throughout the day. So we're able to put out those signals, and so we could see where the back when I talk about backwardation. Let's see if I could do this right. Yeah. So let me draw this. So if this is implied volatility and this is time, so this is backwardation, right? So, but I look at it just in the SPY. So like this would just be the SPY, and I know that you're talking about VIX, but obviously closely related,
right?
So it's usually like this, right? And it looks something like that as you go out, right? But now it's actually kind of going like this. I think it looks something like this right now. I could graph it, but
yeah, that's pretty close to what I saw on VIX Central yesterday.
So yeah, I mean, again, VIX is one way to look at it, but we look at it for each stock as well, and we come up with a contango number for each stock.
Oh, nice.
Yeah. So and the answer is yes. We'll be able to use that, and we're coming up with a methodology for you to be able to enter your own types of factors. So anyway, so here's that contango measurement and for the SPY. So yeah, so yesterday it got really bad. Actually, surprised about that. I thought we got that message on the 6th on Monday. When we got a little bit of backwardation, but I'll have to look at that. But anyway, so the answer is yes. We have that, and this is the release that's coming out next week. So that's gonna be
pretty
exciting.
Soon.
Yeah.
That's your API. Is all that data? And this is a question from the chat too. Can we import the output to a local computer? I mean, can you use the API and download all this data?
Yeah, so this is all done by API, and again, it's in our docs. If you go to ORATS.com, and then you go to our data products, you can look for the data API here, and then we talk about the information here. We have and then we have our docs, and if you have like Python people out there or programmers, we talk about how to go get all this stuff programmatically, or if you're an Excel guy like me, you could, we have these for download, and you just put it, you sign up for your usage key, and you're off to the races here. And if people are interested in that, I could provide that same special pricing for that for the APIs.
So the API is like a separate service, essentially?
Yes. Yeah, it's a separate service, totally. Yeah, we have, like I said, we have, a number of separate services here. So we have, the back tester, the data API, historical quotes, we sell, dividends and earnings. And that's the ORATS product. So yeah, good question. I mean, right, and I'll show you what it's going to look like. Anyway, that we're back on this combination. So let's just look at that real quick. So we're saying the weights are 1-to-1, and we look down here and so in 2008, we were down 9%. just with a short put spread, but we combined it with the long put, and now we're only down 2%. So this might match your investment objectives better. And then we show, of course, all the trades and all that. So, and you can download all this as well. Let me just show you how that contango might work. So if you go to SPY, we don't have contango in yet, but if you go to SPY and then you go to IB rank, it looks a lot like what the IB rank looks like. We just set a min and max. And so you would say, I only want to trade the long call with the IB rank minimum of 10 and maximum of 50, for example, only when it's in the low range. And you'll be able to do that for contango. Like for me, what I test is like, if contango is positive, I'll sell a put spread. If it's negative, I won't. And, maybe buy more puts or whatever. Yeah. So are there any other questions in the chat, Tom, or should I go and just show another feature that we have?
No more questions in the chat. I did have another question about your alerts. It would be interesting if you could have like your position, like a condor, butterfly, whatever, and say if my position delta gets to this or my P&L gets to this, send an alert. Is that possible?
So that's again in development. We've done this for some banks. So they have their, we can say, okay, well, this particular strategy, we could either pair it up to a back test, right? So you would, and then you would find the back test that you would want to pair it to. And then that particular back test has an exit of 300%. I think that was that one. No, this was exiting at 30 delta. So hopefully that comes through. And days, so expiration. So and then it will then alert you when that position violates that amount that of the backtest that you paired it to. So you could set all these exit criteria down here, and this is what it's looking at each day. Whether it be days to earnings, you've a certain amount of days to expiration. It'll say, hey, you wanted to get out 5 days to expiration. We've hit that. Is what that service does. All right, so let me show you just another thing that we've just added. It's just it seems easy, but it's just the long stock or short stock. So now you can just run a long stock, and then then you can compare how we and then you could combine that with other strategies as well. And another thing that we've done is you can choose any strategy. So let's just say it's an iron condor, or let's do a put 1x2. I like this one, where a put 1x2, where you have to get a yield of at least, 0.5%. And you could overlay a stock position on that. You could say, well, I would put 1x2. You could either be long or short. So I might, in married only trades at the same time, overlay trades the whole time. So maybe I'll be long an overlay with that. And you could see how you could have a lot of different options there. So you could overlay a stock position with any of the option positions that we have on. So that's I think a real neat addition. So a lot of people want to compare, how their strategies work compared to their portfolio. As a matter of fact, let me just show you how the portfolio might work. So let's just say you have, this is in the symbol, multiple weighted symbols. So you can put in your portfolio here. Let's say you have 30% of your portfolio is Apple, 40% Netflix, Intel is 20%. You could paste this into the symbol thing, and it puts in your weights there. So now what you could do is you could say, well, what would have happened if I would have done a buy right against this entire my entire portfolio at the same time? So that's really powerful, I think. And then there's more. You could also put in, from Excel or from right here, you could copy in your own signals right now. So if you wanted just to go back and put the actual dates of, you could do that right now in our back tester. So if you would go and get a history of the VIX backwardation and make your own entry and exit signals. Does that make sense, Tom? So you could go and sorry. And I'll show you, so you type SPY, your original entry date 1307, and maybe you're getting out after 30 days or whatever, 60 days. And then, I'm just going to put in some meaningless numbers right now, but like, but let's say these numbers were important in that they represented when the contango occurred, right? So you could hopefully see, and then all you do is copy this in and run a new test and paste it in here. So I paste it in. There are 13 signals. You could either exit the signal or let it run out to expiration. We'll exit the signal. And so here are all the entry and exit dates that I just generated. So I think that's really powerful as well. Yeah. So you could, and then you could run that. So that's a good way to enter your signals. That eventually we'll have a lot of the signals make it easier for you, but now at least you can do it by the ability to create entry and exit points. So this is like, we call a symbol entry exit.
That's really cool.
Yeah.
I was wondering, probably not, but do you support commodities or futures options, currencies, or non-US symbols like the DAX or other non-US stocks?
Yeah, we do not, but we do have all of the U.S. equity optionable symbols, and a lot of those currencies now are ETFs, so you could trade them that way. Or
Right.
a lot of those things are represented by an ETF, so at least you could back test it.
Yeah.
What we're finding is, we get asked that, once in a while, and what we find is the data is just so sparse. It's sometimes difficult to go get that type of information. So like, I'll show you what our procedure is. So I'm calling up strikes on the SPY. This is our API. You could also do this in Python, and you could choose any date. This is the current one. This is today's date. So this is, it's delayed, so we don't have to pay exchange fees or as much exchange fees. So you could see, the volume in the markets. And so we're constantly, putting the smooth market volatility on each strike. So that's only one day to expiration, so it's not that useful to look at that. But let's just look at the 17th. This is the standard expiration. So if you look at that, the money is about 290s. Is 18 is the bid volatility for the call. The mid is 18.2, and then we're putting a smooth theoretical value through that also calculates our Greeks. So this is how, so we have a very in-depth, it's called our SMV, smooth market values. So we calculate these, and this is the basis of our historical quotes that we sell, and the basis of all the summarizations that we do, and the basis of our back tester. So there's 18.5. So that's by strikes. I'm going to now look at implied moneyness. So I'm going to look at, so here are all the expirations in SPY right now, and here's the one that we looked at. And here's the 50 delta is about 18.9 that we saw. And then you could see the rest of the skew here. And then, this is what we talked about. It's kind of cool. Let's see if I could graph this. it's a little bit ugly, but there's the look of the what is that term structure
Right.
at the 50 delta, and you know there's also the 75 delta. People like to look at like the 70 relationship between the 75s and the 25s. You know, the 75s are obviously higher. Let's see if I could graph that. Yeah, so there's the vol 75s higher than the vol 50s, and let's see if we could do that. While we're hot, let's see if we could add something else here.
Another question came in is how far back does your data go, and can you pick any time range in that data?
Yeah, 2007, and yes. So here's that. So let's go answer that question. Here's the data history. So, you know, I pulled up the summary of this is called our general core information, and this is like, you know, volume of forecasts and constant volatilities, and you know these all explained. But here's the month 2 volatility back then, put call slope, how wide the market is in volatility terms, the percentile. Like we have a historical volatility here. We use a modified Parkinson, so you can get a 1-day historical volatility, close to close volatilities. We also have X earnings volatilities, implied and historical. So that's really useful for single stocks. And then we have correlations to the best ETF, percentiles. So right now the percentile is 100 for SPY and 80 percentile for the year. And then that contango and all that is in here. We also have a confidence number. How confident are we in our summarizations? So, and then to answer the question directly, yeah, you could type in any number here, 1307, and we could get just the data for that. You know, first of all the strikes that we did so here are all the strikes back on 14 minutes before the close on 2007. And you can see how fast it came in. And then, you know, so again, let's go to the Feb expiration at the money. 141s is about a 11 vol, or I should say 11 and a half vol. And then we could look at the moneyness and see that for the Feb expiration, it's about 10 and, you know, almost 11 vol here. This is a smooth skew that we draw through the calls and puts in order to come up with our, you know, by delta and all that. And then we summarize that even further. We interpolate in order to get constant day implied volatilities. So there's quite a plethora of data there. If you have some questions, please reach out at Matt at ORATS.
Okay, and then there's another question. Do you have data for SPX?
Yeah, we have SPX same.
Is it possible to do, I know when I was trading SPX, if I wanted to hedge the deltas, I would buy some spiders or sell spiders. Can you do something like that on your back test? You know, use an ETF to adjust your deltas on a index?
You're asking all the hard questions. So
sorry.
No, but that's the answer is we don't have delta neutral, but we have if you did an overlay. So for example, if you did a SPX, I don't know, name your strategy. Let's just say short call spread, for example, and then you wanted to overlay that with being long the SPY, right?
Right.
You could do that. So that you would just choose SPY long stock, and when the SPX came up, so you could combine them that way.
Very cool.
Yeah, it's great.
Now the real-time stuff with the API, that's just delayed quotes during the day?
Yeah, it's delayed quotes, and if people need real time, we have relationships with broker dealers, and that can be arranged.
Okay. But the historical stuff is all just the 14 minutes before the close.
Right.
Okay.
But like I said, this, like right now, this is, somewhat delayed. 20 minutes delayed on that one. Because we're constantly going round and round and summarizing the skews.
Right. A lot of processing going on there.
Yeah. Almost a million options now.
Wow.
And you could download all those too. If you go to ORATS and then you go to quotes, you could download a sample here of a large file. This is 10/16/18, but just similar to the one that we've been looking at. But this is just one zip file, a huge CSV. Let's see if I could just download this right now. So yeah, this is what it looks like. This is a snippet for just the SPX on that day, or on a day.
Nice.
And it has all our smoothing and has the deltas, and we actually put our theoretical values in there, our forecast values and spot price, and we solve for the future.
So when people want to get some historical data, is there like a form they fill out to request a symbol and dates, that kind of stuff, or do they just email you, or how would they do that?
Yeah, you could just go and you can order it right here, and it was pretty reasonable. Let's see, I'll show you some of our pricing. So let's see the quotes. It's is that right? Book download. The quotes are $800 or $1,000 for all years, and you just get everything. And then to update it, it's $99 a month.
And that's like the whole market?
Yeah, the whole market.
Wow.
And
that's a lot of data.
Yeah. We have it ready by the evening, like 9 p.m. Eastern time, 6 p.m. Pacific time. The end of day zip files. Again, that look like that 36 megabyte file.
Can people get just a handful of symbols, or they just have to get the whole market?
Yeah, no, we don't break them out. We make it, we try to charge a competitive price and just, we don't have a lot of programming around it. We just bulk download it all.
Right. And then I think you said you had special pricing as far as people in Aramir want to give your backtester a try. What URL would they go to for that? Maybe you can paste it in the chat.
Yeah, I'm just going to paste it in the chat. It's so it's normally $99 a month, but we're offering it to you guys for $5.99 for the first year, and then it's $7.99 a year after that. So
pretty good deal.
Yeah, it's there's a lot in there, as you could tell. We've had the backtester for now, I don't know, 7 years, and we can do almost any. Where would I put this? Just
there's a chat panel. Since you're sharing, if you go up to the top and you see a little bar with the 3 dots on the right, if you click that, you'll see chat.
Okay, cool. So this is the direct link, and then I'll put some other links in there, like the historical data. These are the quotes, and then if you go to our deck, it has links to a lot of the other pages. And then again, if you guys, just email us and we'll, Tom's been a friend of the firm, and we want to get you guys going and price it aggressively. So, just let me know what you need, and it's my firm, so I could usually get fair pricing done.
It helps to be the boss, right?
Yeah.
All right. Well, I don't see any more questions, Matt. So
Okay.
Well done. Nice job on the back tester. Sounds like you have some pretty exciting changes coming out very soon.
Yeah, and as powerful as it is, I mean, those combinations, you can do anything now. I mean, literally almost anything that people ask we could do, which is quite incredible because people have good imaginations.
Right. Okay, well, if that's, is there anything else you want to say, last chance before we wrap it up?
No, I just appreciate the opportunity, and it's you guys have great questions and you're quite advanced, so you have a nice thing going there, Tom. Congratulations.
Oh, thanks. We appreciate it, and it's nice to have good presenters like yourself. It makes everybody a better trader, which is what we're all trying to do in the end.
Absolutely.
All right. Well, thanks, Matt. Thanks, everyone. We will catch y'all next time.